Most people are paying way more tax than they need to, not because they're doing anything wrong, but because they don't know the rules. So in this video, I'm breaking down how regular people can legally reduce their tax with super simple examples, so you know exactly how to do it too. By the way, just a quick side note, I am a qualified accountant, but not a financial advisor, so make sure to double check these rules for your relevant country and seek a financial advisor before making financial decisions. Let us begin. So first things first on the list. Claim work-related deductions. This includes things like your phone, your internet, your work from home, your tools, laptop, training, anything that is directly related to your job. So for example, if your phone bill is $1,200 a year and you use it for 40% for your work, you can claim $480 as a deduction. However, you may ask, how the heck do you know the percentage usage? Well, good question. Here are a couple of ways of finding out. The first method is the 4-week diary method. This is where for any representative 4-week period where there's continuous work, you want to track your work calls, your personal calls, your work messages, emails, and work-related app usage. You can do this through your phone bill, having a look at your phone settings, like your screen time, as well as just have a simple diary or note. An example of this is in 4 weeks, say you've tracked 50 work calls out of your total of 150 calls that you've had. The work percentage would be what? Correct, 33%, because all you have to do is divide the number of work calls you had by the total calls. So in this case, it's 50 work calls over 150, which gives you 33%. Once you determine that percentage, you apply it to your entire year's phone bill. By the way, you do not need to track for the whole year, but just a 4-week sample is good enough. But just make sure you check this time period with the relevant country's tax authority rules. The second method is the itemized phone bill method. If your bill shows call logs, text logs, data usage, you can highlight the work-related ones. This works best for people who constantly get calls from their clients, get work calls from their bosses, or receive job-specific messages. You just calculate the percentage for that month and apply it across the year. So a second way of how regular people can reduce their tax is a method which a lot of people miss out on. Now what could that be? Depreciation. Yes. So if you buy something over $300 for work, like a laptop or tools, you can't deduct it all at once, but you can depreciate it and reduce tax every single year. So for example, say you buy a $1,500 laptop and use 70% of it for work. Depreciate it over 2 years, that's around $525 of deductions per year. By the way, the number of years is determined by your tax authority and changes for each item. So for example, laptops and computers may have an effective life of 2 years, and then say office chairs might have an effective life of 10 years, but this is dependent on country to country's tax authorities. The third way involves sacrifice. And no, I'm not talking about some weird sacrifice. I'm talking about salary sacrifice to your super. Salary sacrificing is the closest thing to a, in commas, tax cheat code. Money you put into your super is taxed at a lower percentage. For example, 15%, instead of your normal tax rate, which is at a higher threshold. For instance, 32.5% or more in my country. So for example, if you sacrifice $100 a week into super, that's $5,200 per year. You save around $900 in tax immediately. And even $50 a week adds up massively over time. However, there's a caveat to this, is that you won't be able to withdraw that super amount without incurring tax unless you're over a particular age. In instance, in my country, it's over 60 years of age. Okay, we're just over halfway. Now pay attention, because otherwise you may lose thousands of dollars in tax savings per year. Alright, so the fourth method is home office deductions. If you work from home, even part of the week, you can claim home office deductions. And there's 2 methods of doing so. Obviously again, depending on tax authority, but I'm going to use mine as an example. So the first method is using 70 cents per hour, or the actual cost if you have a proper office setup. So for example, say you work from home for 12 hours a week for an entire year, that's 624 hours. Then multiply that by 70 cents per hour, which will give a $437 deduction. The fifth type of deduction is the car expense deductions. Now, if you use your car for work, not driving to the office, but for actual work tasks, you can claim car expenses. And there's 2 methods. One is the cents per kilometer, and the other is the logbook method. I'm going to use the cents per kilometer method for this example. So say you drive 3,000 kilometers per year for work, and in my country it's 88 cents per kilometer. So if you multiply both together, that will give $2,640 that can be claimed. And if you drive a lot for work, this alone can save you thousands. Now the sixth way is for the small business owners out there. So for example, say the business earns 5 grand. You then buy a laptop for $1,000 for the business. You can deduct the full cost. Plus, you can claim video conferencing, apps, textbooks, advertising, as well as a portion of your home office that you use for the business. And the last method, in which most of you I know do not do, is prepaying deductible expenses. So for example, say in June, you prepay your $400 membership, you prepay a $300 course, and a $200 software subscription. That's $900 of deduction this year instead of next year that you can claim. However, my tax authority also mentions a thing called the eligible service period, which is simply the length of time the prepaid expense covers in advance. So for most individuals, including small businesses, the rule is if the prepayment covers 12 months or less and ends in the next financial year, you can claim 100% of it in the current year. This is called the 12-month rule, and it's the one that applies to 99% of people. So in other words, if your prepayment covers no more than 12 months and the service period ends before the financial year in the following year, you can then deduct 100% of it now. So here are a few examples to make it crystal clear. Example 1 is prepaying a 12-month subscription. Say you pay $200 for software on the 1st of June 2025. This prepayment covers from the 1st of June 2025 till the 31st of May 2026. This is 12 months, which ends next financial year. That means you can deduct 100% in the 2024-2025 tax year. Example 2. Say you paid $300 for a course on the 28th of June 2025 and the access lasts 6 months. Then yes, you can deduct 100% of this. Example 3. Say you prepay a 2-year membership. $600 membership on 1st of June 2025 and it covers for a 24-month period. So what can you do? The answer is you cannot claim it all this year, and you must spread it over the 2-year period. Anyway, these are the 7 easiest and completely legal ways normal people can reduce their tax. If you got any questions on the video, then leave a comment below and I will be glad to answer them. So yeah, if you found this video informative, like the video, comment and subscribe. And yeah, I'll see you in the next one.